on today's episode of the Cryptoverse. Don't look now, but the storm may be clearing after Bitcoin bounced off $6,000 and the US Senate hearing on virtual currencies went rather well. All of that on today's episode of the Cryptoverse, so stay right there. Hi there guys, welcome to the latest episode of the Cryptoverse, your regular dose of news and commentary on Bitcoin, cryptocurrencies and blockchains. I'm your host, Chris Coney. So yesterday, the US Senate Committee on Banking conducted a hearing on virtual currencies. It lasted about 2 hours and the live stream is now archived on the Senate website. The link I gave you yesterday was good for the live stream and also good for the recording, but I'll put it in the show notes for today as well. Now, the general consensus in the crypto community, especially if you look on Reddit, is that the hearing was very positive, and we seem to have somewhat of a new friend in the form of this fellow, Christopher Giancarlo, who is the chair of the US Commodity Futures Trading Commission, CFTC. Now, his statements at 32 minutes and 40 seconds into the recording, he tells this personal story about how his college-age kids were unresponsive, shall we say, when he and his wife set up each of the kids with a brokerage account with like $100 in it and encouraged them to get into the stock market. He then goes on to say that when his kids discovered Bitcoin, the level of enthusiasm went up significantly. They just were not interested in the stock market thing. He said one of his kids was interested, but all they did was just invest in a computer gaming company, right? Now, the key quote from this whole thing is, it's actually been turned into a meme where he says, quote, "It strikes me that we owe it to this generation to respect their enthusiasm about virtual currencies with a thoughtful and balanced response, not a dismissive one." Close quote. Now, when he says we owe it, right, to me, that's a subtle recognition of the fundamentally different economic environment that exists now for his kids versus before, say, the 2008 financial crisis. It's a distinctly different economic environment that they find themselves in. So like the investment banks, they get the blame for causing the 2008 financial crisis, but really it started with the government forcing the banks to lend to people who had poor credit and were therefore high risk, right? So when those people defaulted, as they were likely to, the banks got the blame for that and had to be bailed out and all the rest of it, right? Anyway, as I watched this fellow, his impression, my impression of him rather, he seems like a balanced guy, right? Rather than somewhat of a stereotypical government regulator that's on a power trip, right? He does seem like a balanced guy. The other thing I did notice though is that the actual senators themselves, like I think 3 of them distinctly pretty much said the same thing when they started their questioning, which was, I'll paraphrase it, but they all pretty much said the same thing in and around, "In my day, we used pencil and paper." That's pretty much what at least 3 of them said, which to me was like a forehead slapping moment. These guys are just, with the best will in the world, they're just out of touch, because things have changed so significantly. I mean, things have changed so significantly in my lifetime, and I'm not even that old, right? I can't imagine what it's like for the 18-year-olds of today in the digital world. At least I knew the world somewhat before the digital revolution and have seen it happen. So at least I've got some memory of the old system, right? Pencil and paper. Whereas the digital money revolution for these other senators, this is only relatively recent in terms of how long they've been alive, right? Anyway, like we always say, let's skip over to the charts now. Like we always say, there's no real way to know exactly why the markets move in a certain way. However, there are 2 forces that coincided very well yesterday that were relatively positive that has helped the price move. So, the relatively positive hearing results and the fact that Bitcoin bounced right off of $6,000 and has been rising ever since. It actually hit $6,000 here at 7 a.m. London time yesterday. And I had the hourly chart open for most of the day as it gradually rose up, as you can see here, as to where now we are above, quite a bit above the 50-hour moving average. And we've just, as I speak, broken $8,000 a Bitcoin. So that's kind of nice. Now this is also where if I do a full, well, let me just make the volume chart bigger, because this is where the blue line on the volume chart is useful, because this blue line makes it easier to see how the volume is changing. If you just see the the scattered bars, sometimes it's obvious, sometimes it isn't, but the blue line it's an average of volume. So if it goes up like this, it means volume is increasing, and it's easier to see than the scattered bars, right? So that's what you notice here, is that the volume really picks up as the price reaches $6,000. So that seems to have been enough buying coming in around 6,000 to kickstart somewhat of a recovery here. However, just like we see during an uptrend, let me just put my volume chart back where it was. Like we see in an uptrend, right? The price pulls back to the trend line. So I always talk about phase 1 and phase 2, right? So if it's in an uptrend, phase 1 is when it waves up in a rally, and phase 2 is where it pulls back slightly, to prevent it from being overextended from the trend line, and then it takes off in a phase 1, phase 2, and it has that jagged, what does Cliff call them, crocodile teeth in an upward movement. However, that also applies in reverse. So if you've got a downtrend and the price drops sharply, then it pulls back to the trend line before then going lower, and so on. So that's the trend, right? Higher highs and higher lows, or lower highs and lower lows. What I'm getting at is, I don't want us to get faked out by this. It looks very good so far, and we actually have a somewhat of a trend here, because we're getting higher highs and higher lows. So that, well, I've just drawn that channel right there. So yeah, higher lows but being set, one there, one there, one there, and then higher highs, one there, one there, one there. So there's at least 3 on each side. So that, in a very short-term time frame, is a technical uptrend. However, if you compared it to the length of the downtrend, I think the downtrend is still winning in terms of its length, in time, right? So I want to see a break above 8,000, which we've done, or rather 8,300, which is, let me just get rid of these channels because that's going to confuse us otherwise if there's too many lines. It's the white horizontal line on my chart. This was the 8,300 that we were looking at on the way down. This was where, when that broke, when it broke, that's when it really went down in almost like a vertical one direction. The bottom really fell out of the market at that point. So if we get back above that and hold, pretty good. Then if we get back above the 200-day moving average, that will be in very good shape. Then it's just a case of breaking the round numbers like 10,000 and so on. And I know I keep moving the goalposts here, but this is the thing. It's a analog system, right? Meaning it's granular, and it's all about its probabilities. And it's not binary. When people say, "Well, how come you said it was support and it broke?" Well, it's not a binary, right? So what I mean by that is the strength of this recovery gets confirmed, becomes stronger at various points of confirmation and various milestones. So the first milestone was to have a bounce and a rally. Okay, good. Now we've broken 50-hour moving average. Nice. And then 7,000, another positive sign, and 8,000, another positive sign. So you have to stack, the signals, don't you? So the next one being 8,300. If we break that, we can put that in our back pocket as being a positive thing. And then if it breaks the 200-day moving average, you get these confirmations that give you increasing confidence. And that's really where momentum comes into the market, right? The more positive news there is, the more people buy, and then on and on it goes, right? Now, I'm just an observer in all this now. And I say that because I published the details of when I made my move and what coins I bought, and I'm still holding those positions. So if you missed this article that I published called The 8 Cryptos I Bought in the Crash, When and Why, you can catch that on my Steemit account. Of course, I did enter the market early, if you know what I mean. So the prices did fall after I went in. However, I think it's more important to do your analysis, do your strategy, decide on when you're going to get in, when you're going to get out, take decisive action, which I did, fully accept the consequences, which I am, and then let it play out, right? And not change your mind in the middle. That's kind of the key thing. So I have no problems with publishing my positions there and when I went in and saying they're underwater right now. That happens in trading. You have to be able to stomach that and hold your nerve and not pull the trade off the table and change your mind in the middle, right? I decided when I was going to get in, when I was going to get out, what my profit targets were and all that kind of thing. And then you can't let what happens in between buying and hitting your profit target get in the way, right? Because then it just messes with your head. So that's really where mastering your emotions comes in. So anyway, that's my analysis for today. It is Wednesday today, which means I have to go and create a new lesson for my trading course today. So I'm going to leave this episode there. So thank you very much for joining me today, guys. If you like this episode, go ahead and hit that like button. And if you're new around here, get subscribed. And if you'd like access to my very best material, such as my online trading course on how to trade cryptos, go over to cryptoversity.com, click on courses, and you can scroll down and take any one of my online courses. The one I'm working on today is this one, the Master Cryptocurrency Trader course. So I'll have to add a new lesson to that today to keep that coming. Or last call, actually. The last time you can book my live one-day workshop is tomorrow. So 8th of February is the last day to book this one-day crypto investing workshop, which is happening at the weekend, Saturday the 10th of February in London. So if you want to get that, last call for tickets for that, and I hope to see you there. Other than that, guys, I'll be back tomorrow with another episode of the Cryptoverse. Actually, it's live stream tomorrow because I'm traveling on Friday, so the live stream is going to be tomorrow instead. So until then, it's me, Chris Coney, saying bye for now.